year, almost about 2 lakh people have received the notices. Artificial intelligence or technology has made things very easy to send out notices quickly. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
डॉन को पकड़ना मुश्किल ही नहीं, नामुमकिन है.
I think for the last 7-8 years, everybody's file is opened and they are sending blast messages. 18 to 24% is the interest and almost 25% to 100% is the penalty. A lot of people say that I didn't know they were fake, I did with a good generosity. If you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
They say tax is one of two things in life that is unavoidable, inescapable. That hasn't stopped people from trying. For years, some people have approached tax paying with the tagline immortalized by Amitabh and Shah Rukh. Dawn ko pakadna mushkil hi nahi, namumkin hai. But the problem is that the long arm of the taxman has in fact gotten more efficient. Over the past few months, thousands of notices have been sent out seeking explanation for some inconsistencies. Some of that has to do with rent paid. Other notices are because of tax breaks that were claimed for donations to political parties. And still more because of credit card spends. If you've got such a notice or could potentially get one, this conversation is for you. This is Moneywise on NDTV Profit, and my name is Alex Matthew. Join me today is Abhishek Mehta, who's a chartered accountant and who has his own firm. Abhishek, thanks so much for joining me today. Absolute pleasure having you. And in fact, I've met a few people who've gotten such notices. They've all come to me and said, what do I do? What do I do? The question is, why do you get it in the first place? Have you heard of a lot?
Yes, so I think this year almost about 2 lakh people have received the notices. But let me go back a bit. Out of 8 crore people who are filing the returns, income tax considers 99% of them as genuine. That's why we call them as a self-assessment tax. And there are only a couple of 1 or 2% people who try to get these notices. So about 1 to 2 lakh people have got notices on 5 or 7 major reasons. One of them is people who have bought properties. Second is capital gains on F&O, equity shares. Third is political donation. There's a huge drive going against the political donation. Fourth is your credit card spends. Fifth is cash deposits. And sixth is a lot of people have some foreign assets which they are not declaring while filing the returns. And because of a good exchange information with the department and abroad departments, income tax department is getting a lot of asset information of the foreign assets which people are holding. So that is why income tax is sending out these notices and trying to get the exact source of the money from where this is coming.
Let me clarify, is this driven by actual people or is this automated messaging that is going out if certain triggers have been hit? And I'm talking about use of artificial intelligence, use of your annual income statement and all of the data now that the income tax department is pulling.
So almost 70 to 90% is getting automated.
Sure.
Use of artificial intelligence or technology has made things very easy to send out notices quickly. But what income tax is also doing is first they are giving them a chance that, if you want to revise your return, go for an ITRU and revise your returns. Because if you know that I've done something wrong, a chance is being given by the income tax department and they are not just starting the scrutiny. And when people are not responding or people are responding that, no, I am correct. And that is the time when they start with the scrutiny process.
And it can get pretty lengthy. It can go all the way to court. We'll discuss a couple of those instances where the claimant or the taxpayer has actually won a case in court. And that happens more often than you would think. But let's talk about some of these instances, right? And one of the most interesting ones that I thought was interesting was the political donations, because people have been claiming, and I do not know what section, you'll be able to tell me, but people have been claiming these donations, but there are also scenarios where I've heard of fake donations being made, a certain cut being taken and money being returned for a receipt that says that you've made a donation. Is this something that occurs?
Yes, so I think most of the political donations, usually when income tax knows that if somebody is an employee and they are doing political donations, there will be very rare chances. If somebody is earning 15-20 lakhs, why would he do a political donation of 3 lakhs? Because Section 80 GGC, which allows political donation exemption, doesn't have a higher limit. So somebody earning 20 lakhs, lot of time also does a 10 lakh political donation and try to claim the entire exemption.
What is the section about first, before we get into why people are getting these notices? What is the section about?
So section is pretty easy. So any politically, like any recognized political party, if you do a donation to them, you can claim 100% of the amount as an exemption.
Okay.
So if I'm earning 20 lakhs and I say that I have donated to a X party 20, 30 lakh bucks, I can claim the entire exemption.
There's no limit.
There's no limit at all. So people have been using this, tool to evade a lot of taxes, especially employees, because that's where the major taxes are cut. And that's the Income Tax Department has started a very big drive to catch these people. And most of these political parties are not genuine.
But tell me something, and we'll discuss this specific case that stood out in the sale of a house and between a husband and a wife. So the question that I have is that if you have done such a donation, knowing full well that you are getting a tax break and the donation is actually being returned to you after this cut, how does that stand up in the court of law? And I'm saying that ultimately, okay, these are so-called fake political parties, but they are registered as political parties. They've got the certification and they're giving you a receipt. How would it hold up in the court of law?
So it doesn't hold up because what happens is first they arrest these political parties.
Okay.
And then they take statement from them that whatever donations have come, the cash was returned back to them. So they have a proper written statement. So when you go to the court of law and try to challenge this, even I can say, I didn't know they were fake. A lot of people say that I didn't know they were fake. I did with a good generosity.
Yeah.
It doesn't hold up too much.
Because
in fact,
you've proven that you've gotten the money back.
Yes. In fact, you will get into more trouble because then they will call you for statement and various things will start and people don't want to get into that zone. So better to pay off and, or go to appeal, and if there is some amnesty scheme coming, pay the tax and get yourself free out of that.
Especially if it's a large amount of money. Right?
Yes.
Would there be the payment of an interest on tax due in such a situation?
Yes, there will be a penalty also and there will be interest
How does that work?
So 18 to 24% is the interest and almost 25% to 100% is the penalty on the amount of tax which you tried to evade.
Wow.
So,
no, but I'm saying in this case, somebody's gotten a notice and suppose they've done this. Even in that case, if they go back and say, okay, hey, you know what, you mentioned...
Yes, ITRU. You can file a revised return, yes.
So in that case also...
You have to pay the penalty also, the interest also. Both things you have to pay.
How is it determined?
So whatever the amount was there, suppose it was a 17-18 donation.
Yeah.
So almost 8 years have been. So as per 8 years, you have to pay 18% interest on the tax component, plus 25% of that amount additional has to be paid as a penalty.
Wow,
to the Income Tax Department.
And as a chartered accountant, your advice would be that if you have engaged in this, you should go out and pay that up.
100%. Most of the people, what they are doing is they are just trying to play with the time so that if some amnesty scheme comes, they will file. Because in amnesty scheme, what happens is a lot of time you are getting some rebate on the interest and the penalty side.
Sure.
So people are a lot of time waiting for that amnesty scheme and trying to just take more time, replying the notices or probably filing an appeal. So that's the only, eventually you'll have to pay. There's no way out. You cannot say.
And this is only one of several instances where people are getting these notices.
Yes,
so
yes.
The second, incidentally, is where there is credit card spend that is scrutinized.
Yes.
Now, this is an interesting thing because you and I both know there are so many videos out there that talk about how to generate points quickly, and people tend to pay for their family. Right? So if you are booking flight tickets for your family or you're booking a hotel for your family, you pay and it all gets paid to you eventually. So is that the kind of thing that can cause you to get a tax notice?
Yes. So mostly people who have done a credit card swipe of more than 10 lakhs are getting these kind of notices where they have been told to know the source of the income. So how did they make the payment? So if you have made a payment of 20 lakhs on the credit card, they're asking for the source.
Sure.
So if you have used your friends, if I am booking for you supposedly that ticket, you or me are not related. And if you are sending me some money, that might get taxed as an income.
All right, so that's credit cards. And so therefore have your rationale or your reasons ready for why you've spent more than 10 lakhs, right? Or very large amount. You mentioned capital gains arising out of futures and options.
Yes.
Why is this problematic?
Because what happens in capital gain, the premiums are very less. In case of FNOs, the premiums are very less, but the turnover is very high. So when your turnover is very high, obviously it gets red flagged. And that's the time when income tax starts sending more notices. So people tend to avoid taxes on their capital gains or on their FNO income. They try to give it in the capital gain. Whereas FNO, even a 1 rupee income, it should be clubbed in a business income. It's a business income purely, and people don't want to go to that route because like you are an employee, so you don't want to file a business income.
So the simple rule here is that if you are engaged in futures and options trading, and if you are making even a single rupee of income, then you need to go into the relevant ITR form and file as business income and not any other. And if you don't do this, then you will likely get a notice for previous year where you filed it under the wrong section, right?
Yes, yes.
Okay. You mentioned sale of houses, and we'll talk about this in more detail. So actually, before we get to that, let's talk about the foreign ownership.
Yes.
You mentioned that as well. And this has to do, as you've pointed out, with ESOPs that you might have gotten in companies abroad. Is that what you're saying?
So a lot of times in India, like the holding companies are outside. So people get ESOPs of their holding companies, which probably might be US, Canada, or any European countries. And they don't show it in India. Whereas you have to compulsorily, if you have even 1 rupee as a foreign asset, you have to compulsorily declare it in the FUTKA. And people avoid it. So that is where a lot of income tax notices have started.
Sorry, you mentioned FUTKA. What is FUTKA?
Foreign asset declaration. Basically, if you have a bank account in US, you have a bank account in UK, a lot of time also what's happened, like an employee of TCS might go for a year to UK, so he might have some bank account there. Which is still active. He has come back to India, there would be some 100, 200 pounds left there. But he has to declare it in India. Even if there is a 100 pound, if you hold any foreign asset, you have to declare.
And then?
But majority of the notices are being issued for the ESOPs. Because if ESOP was issued in foreign, what happens is people don't pay tax in India. They should be taxed as perquisites. So, but people try to avoid those taxes by not showing it that they got some ESOPs or they have some bank accounts in Singapore, US, and they try to avoid all these gaps. But luckily, with the kind of exchange of information which today Income Tax Department has, it's very high, and they are getting all those statements, all those
So
information.
just a clarification on this. It is relevant that you have ESOPs if they were issued in a year when you were a resident of India.
Yes.
Is that right? If they were issued in a year or vested in a year when you were not a resident of India, does the rule still apply?
Still applies, but you have to show it in your income tax. You have come down to India, you still hold some stocks in US, so you have to declare that in your income tax. If you're not declaring, then that's the issue.
What are the implications from a tax perspective on declaration?
So what government will try to do is they will find out how did you purchase these ESOPs. So if you were in India at that time and your ESOPs were granted, did you pay the tax or not? You were in US, the ESOPs were granted, you can provide the explanation and get out of it.
Sure.
But that's where government is trying to catch people where they were in India, they were granted ESOPs outside, or probably somebody sold their ESOPs.
Sure.
But they didn't show it at capital gains because there's almost 20% tax on that. And that is the time when income tax starts sending the notices.
So it's a matter of dotting your I's and crossing your T's. I nearly said the opposite thing, but anyway, lucky that my brain is not playing tricks on me. But having said that, let's talk about one more, which is you said cash deposits.
Yes.
I don't know how many people are doing that. I haven't heard of many now doing cash deposits. Does it still happen?
But a lot of business people keep withdrawing cash and depositing cash. And if the cash deposit is more than 5-10 lakhs, income tax is just trying to ask them what is the source of this cash.
Sure.
Because if supposedly you sold some property, you got 5-10 lakhs cash and you're trying to deposit that, then income tax will come to know, because you have to have a source of that cash, whether it came from selling some gold, whether it came from, whatever source. But
people have been selling vegetables or claiming to have sold vegetables and using that as...
so they are showing it as agriculture income. But if you're showing an agriculture income, you have to have the receipts of the agriculture income. You have to have the land in your name, or probably an agreement which states that that land has been rented out to you.
I can't grow cabbages in my balcony and sell them and use that as...
What would be the amount of that? 10,000, 20,000?
They're very good cabbages, Abhishek.
But if you deposit 10 lakhs, then I think income tax will come to your house to have that cabbage with you.
That's a good point. Okay, so you need to have valid proof of having generated that kind of cash, right? Okay. Let's talk about the last thing, because that will lead us to the next leg of this conversation, which is how to deal with the sale of real estate.
Sale also and purchase
and
also.
Purchase.
Yes.
So why could people be getting notices for sale and purchase of real estate?
So for purchase, mostly it's again what's the source, and especially NRI people have received a lot of notices. What they had done is in the earlier 7-8 years, they had sent money probably from Dubai. They were working in Dubai, Europe, US, Canada, anywhere, and they were sending money to India and purchasing these properties. Income tax have started initiating the notices. Why? Because their Indian income is zero, which is true. But they want to still know the source of income, that how did they get that 1 crore or 2 crore to purchase the property. So a lot of NRI people have started receiving notices on the purchase of property. Even though the source is legitimate, they still want to go inside and in depth and check if there is any hanky-pankiness in purchasing this property, whether the individual was actually an NRI at the time when he sent that money from any part of the country. That is why income tax is behind people who are purchasing properties in larger chunks.
Now, this NRI situation is quite problematic, because when you are a buyer from an NRI, the onus is on you as the buyer to deduct tax. Is that right? And if you don't deduct tax because the individual has not told you that they are NRI, which they should be doing, then you can be liable and you can have to pay a penalty. Is that right?
That's right. You have to deduct about 12.5% in TDS
of
today.
Of the total amount?
Of the total amount. So if an NRI probably purchased a property at 4 crores, he's selling at 5 crores, but the 12.5% will be deducted at the entire proceeds of 5 crores.
But you as a buyer can get a notice from the tax department asking you to explain why you did not collect
Yes.
TDS.
If I have sent the money in his NRE or NRO account and I have not deducted the TDS at the right rate, so if the property was, the NRI was holding the property for less than 24 months, I had to deduct 30%.
Sure.
If he holded the property for more than 24 months, I had to deduct 12.5% plus surcharge plus cess.
Right.
And if I don't do that, then I'm in problem, and income tax TDS department might start prosecution against me.
And you could have to pay penalties on the amount that you... What are the kind of penalties you would have to pay?
Again, 100% of the entire amount.
So 100% of the entire amount?
Yes, it can go 100 to 200% is the penalties, which are range of... And problem is that in income tax, there is very less arrest. But in TDS, if you try to play around with TDS, the chances of arrest is very high.
Okay, so... Therefore, when you are buying a house from anybody and it's a secondary sale, obviously when you're dealing with a developer, you don't have to deal with this. You need to ask whether they are NRI. But if they are not forthright with that information, is there a way for you to check that they are NRI
See,
or not?
mostly how do we check is that are we sending the money to his savings account or are we sending it to the NRE?
How do you know
account?
the difference?
When he sends the check that you need to transfer to this account, so obviously the account type is written that this is an NRE, NRO or a savings account. So that is the time, 90% of the times we come to know whether this guy is actually an NRI or an
Is
individual.
it possible that they give you an Indian bank account to transfer it and they can still be an NRI?
Yes, that is possible.
So, and then you're still liable to pay TDS?
I mean
not TDS, but collect TDS?
Yes, but mostly I will not come to know. If somebody is lying to me, I will not come to know.
So then what is your defense? I'm saying, what is your defense as a buyer, as a buyer from an NRI if they do not disclose to you because they don't want that tax to be deducted, so they don't inform you? What is your defense?
So I think when such notices come, you can actually reply to them stating that, the buyer didn't inform us that he was an NRI or an NRE, NRO account holder. He gave us a savings account and we transferred the money to the savings account. So now the prosecution will be started against the NRI person.
Hopefully.
Yes, because he gave the wrong bank details to get the money transferred.
So that if the wrong bank details are given, that is there any other way to check if a person is NRI?
Not much, whether he's an NRI, NRE, because every year the status can change. It's not like a passport, whether he has an Indian passport, whether he's a, some foreign passport or other than different passports. But in PAN, it's very difficult to know whether that person is resident.
No, exactly,
or not
because you need
resident.
to have spent a certain amount of time in India. If you've not, then you effectively in that financial year become NRI.
Yes.
Right? So so it's complicated. So therefore, viewers should bear this in mind. If somebody is giving you an NRE, NRO account, then of course you need to be collecting tax or deducting tax at source. If they're giving you a savings bank account, then that is your defense. And that's the only thing that I can say.
Just one hack for the NRIs who are selling their property and giving the NRE, NRO account, they can apply for a lower TDS deduction certificate.
I do want to talk about a few ways in which people should, because I got an interesting query. Okay, so the query that I got, and this is not related to tax notices, is related to sale of property. The query I got was, if you are selling a house that was redeveloped, does the value at redevelopment count as your starting point for the calculation of capital gains tax, or does the original cost of the property get calculated? And how do you choose between the indexation benefit at 20% or 12.5% flat rate?
Right. So the answer to this is, you will fall into one of the three buckets. The first bucket is, did you purchase the original house before 1st April 2001? Or you purchased the house, original house, between 2001 and 2024, 23rd July 24, and whether you purchased it afterwards. In the first case, if you have purchased the house before 2001, what will happen is you have to calculate an FMV, which is a fair market value as on 1st April 2001.
That's when the index starts.
That's where the indexation starts. And from there, you can calculate how much is your index cost. Now, for benefit, what is indexation? Basically, government says that whatever the inflation rate is every year, let's increase your price of the property by that much rate. So almost about 4 to 5% is the annual indexation. So if you have bought something at 100 rupees in 2001, today it costs about 200 or 250 rupees as per the index cost. And if you sell it at 300 bucks, so government say only pay on this difference.
Between 200 and 300. So 100 rupees and not 200 rupees.
Yes. So you have two options. Either if you have purchased for 100 and sold it for 300, you pay 12.5% without claiming any indexation benefit, or you pay 20% with indexation benefit.
So the simple answer, I think, in this case would be to calculate the two and see whichever is less, you pay that.
Yes.
Right? Now, a couple more things, because there was an interesting story recently about a couple that went all the way to court to settle a dispute because the wife sold a property and used the proceeds of that property to buy a property from her husband.
Yes.
And avoided paying any capital gains tax.
Right.
And the tax department was like, hey, that's not allowed. But the court allowed it.
Yes. So that was a very interesting case. What that lady did was, she got a gift from her husband, a house. Okay. When you get a gift, now whenever I sell that house, because it's a gift and from a husband, it's completely tax-free, first thing. Now, when I sell the house, I will have to pay the capital gain. So the wife had to pay the capital gain tax. She sold two houses. She got about 6 crores in receipts. Now what she did is, her husband holded one more house, which she bought from the husband itself, and paid the husband 6 crores and claimed the entire deduction under section 54, and that the capital gain came to 0. Now what happened in this case is, assessing officer first rejected this claim. She went to CIT appeals. Again, CIT appeals rejected the claim. Then she went to ITAT. Luckily, ITAT allowed this and said this is proper. Why? Because she has purchased the property properly.
So transfer of ownership takes place.
The transfer of ownership is there. Stamp duty has been paid. Payment has been made properly. Then why she should not be allowed the deduction under section 54?
So this is a loophole that has been used, and it has been used effectively. I wonder if legislation will come in to correct this.
Yes.
So that's one thing to bear in mind. The last thing I want to talk about, because we were talking about it on the way to studio, is that there are certain things that you can do to reduce the capital gains that you pay at the end. And one important point that you made was, you can actually save the receipts from anything that you spend on beautifying the house, including furniture and structural repair. How does that work? It's through the life cycle of the house.
Yes. So when you calculate the capital gains, what happens is you have to reduce 2-3 expenses. The first expense is your cost of acquisition. That's the first expense you have to deduct while calculating the capital gain. The second is whatever charges have been incurred while selling. So if you have paid any society transfer fees, you have paid your brokerage, all those expenses can be claimed to reduce your capital gain. And the third is your cost of improvement. So if you have spent anything on your house to improve the house, basically your furniture, painting and all these things, you can claim that as well in the deduction while calculating your capital gains. Only thing to keep in mind is you have to have your proper bank statements where you show that the payments were made and the bills of these house improvements, and then you can easily claim all these expenses while calculating your capital gains.
Another reason for you to keep a good file with all of your receipts, as painful as it sounds. Thank you so much for joining me today, Abhishek. Absolute pleasure having you.
Thank you so much.
Well, this has been a fascinating conversation. You can always talk a little bit more about taxes, and I'm sure you would like to hear more on the subject as well. Let us know what you think and what you'd like to listen to. Thanks so much for tuning in. This is NDTV Profit.